Today is June the 10th, last trading day of the week. Next week's trading will be dominated by the FOMC, and part of the overnight news commentary is the FOMC announcement, Bank of Japan's announcement next week, and whether Britain stays with the European Union or not the week thereafter are all factors that are making traders and investors seek flight to quality. Don't want to take any risks. Too much big news about to be dropped on the market. The market's telling us that the Fed will not raise interest rates in June. I don't see how they can. That's been our position forever, that the Fed really is trapped. They can't raise interest rates by much, because if the yield on the government portfolio went to its historical levels, a little over 5%, that would take debt service from $280 billion a year to close to $1 trillion. And that would take us from a $4 trillion government budget, where we have deficits of $500 billion to $1 trillion a year, to a deficit of approaching $2 trillion, trillion billion. Get them mixed up these days. So that's why the Fed really can't raise interest rates. Okay, the news overnight was limited. Industrial production in Germany and Italy beat forecasts. Construction spending in the UK beat forecasts. Japan's tertiary industrial activity beat the forecast. So the economic news around the globe was higher than forecast. Today's consumer sentiment can come in lower than forecast at 94.5. Not usually a number that moves the market, because it's the only piece of news in the U.S. today. It might. And then Baker Hughes rig count for North America last week was 449. My guess is it could actually come in higher, as people see crude oil at $50 a barrel. Okay, the strength in the financials was attributed to equities around the globe selling. Asia collectively was off 1.9%. Europe collectively off 5.66%. The United States E-mini is the dog. The rest of the world is the tail as far as equities go, and that's pointed down right now. The selling in the E-mini is blamed on crude oil being below $50. And they did say the strength in the dollar, but the dollar is down against the yen, and the dollar is down against the euro dollar too. So whoever wrote that article certainly wasn't looking at the quote board. I like the long side of the market, but can sell failure to take out 12 to 16. Like to buy early weakness to see if we can take the market higher and break resistance. Sell 2 will be at 19 to 23. On the buy side, 8 to 4. Let them get stops below 8. Spook the weak length. And then 29 to 1 for buy 2. Looking at the 30-year, resistance begins at 8. So, given the volatility in this contract, 15 to 19 sell 1, 23, 27 sell 2. And with the E-mini selling, we really aren't interested in the short side of the market. The buck to 28, number 1, 21.25 buy 1, and 9 to 13 buy 2. Don't see anything out there that really says that Treasury should sell, given the economic conditions, but you never know for sure. Which I hate it when I say that. It's the truth, though. just have to pick your shots, control your losses, and let your methodology work for you. Okay, gold in a holding pattern last night. It was when I looked early this morning. Can we break the 65-67 area? We got a B right here. Says we might probe lower. Then below that would be 62.60. So 65-67 by 1. Stock market sells. We'll have to pay up to get in. Buy 2, 60 to 62. Sell 75 plus or minus. Then 80 for sell 2. I think gold's trading up. Do like the long side better. Failed to take out 75. The market can sell just on weekend, end of the week profit taking. Okay, while the financial press was talking about a strong dollar, and that was the reason given for taking the price of crude down, you really don't, I don't see a strong dollar in what the futures contract are doing. We are trading September right now. You can trade June today, but roll to September on Monday. But the volume should be moving into the September contract. And again, usually through about noon of the day because of rollover and repositioning, the liquidity requirements, so we don't get our normal moves. We saw that yesterday in the stock index futures. Okay, we're at 38. We have a high of 59, then a high at 47. So 45, 55, sell 1. 65, 75, sell 2. Pretty aggressive on the sell side. On the buy side, 13.25, buy 1. That's pretty aggressive. I think they'll go for stops below 113 even. So 113 area should bounce us. I could get long off the buck. Crude oil, how low can it go? Go back and look at the F1 screen. Got volume at 49 and a quarter, but I think this is the area, this 47 area is really where major support's going to be. 49 and a quarter, we got a high volume number there, can pull us to that. So getting down to 49 is not going to be difficult. So we have volume at 49 and a quarter. We got some more volume at 94. First low volume basically is 48.50, 48.60. So if we break this low, we should make it down to 49, 49 and a quarter. So first buy is 49, 49 and a quarter. Then 48.50, 48 and a quarter. On the sell side, pretty clean break up here at 50.24, so 50, 50.24, sell 1. And then 50.50, 50.75, sell 2. And that does it for crude. Okay, on the E-mini, it is pointing lower. Interestingly enough, George Soros put out his announcement that he was short major markets, and if you look at the announcement he's made, he's buying gold mining stocks, running for the sidelines and supposedly shorting indexes now. Mr. Soros is if there was ever a self-serving individual making announcements to support his positions, George is the epitome of it. So George is trying to get a little help to the downside. Okay, I think Frankfurt time, this KL tends to start the moves now as opposed to London. London has followed along right now, so we've got a pretty clean break in the market at 97. So 94, 96 will be sell one, fairly aggressive. London's last rotate up was 98, and then 99 to 01 for sell 2. Got volume at 87.50, so 85, 87 buy 1, and then 75 to 80 buy 2. The key's going to come in panel 3 on the F4 screen. What type of buying do we see by the large players? And in a down market, if we see every tick being bought, then we know that the Fed is in operation buffering the selling. They will let it sell, they just don't want the bottom to fall out of the market. And they make it expensive, or a slow grind anyway, for those that just totally get short and throw everything at the market. So I like the short side better first. We'll see if that materializes. You can see support down here at 80. That's probably our best support, 75 to 80. 75 should bring in opposite activity. Consumer sentiment, 94.5. That number could come in lower than forecast. I have no idea where Baker Hughes will be. My guess is it might be a little higher because the price of the oil was 50 bucks. People might go out and do a little work. Last report was 449. That includes Canadian rigs too. Got quite a bit to do. See you as fast as I can.